I'm going to stay here by the computer since it's nice and in front. So I do have a couple questions. So who here has had a client affected by the storm? Anybody? You? Did y'all make it safe?
Yeah.
Like, no issues?
Yeah.
Right? So you guys put your house on the market and be able to sell it and make a fortune, right?
I have a client that's been affected by the storm.
Okay. So, you know, in a neighborhood out by me, there is 700 homes, 750 homes, 500 were damaged in a very nice community called River's Edge, hence River Edge, right on the Brazos. So as it came up, the water was literally coming through the drain pipes. So a lot of those folks had their homes on the market. A lot of those folks are going to have to, do something else. So have you guys had any experience or talked to anyone who has had contact with FEMA?
Yes, I actually walked with the FEMA inspector.
How'd that go?
Really well, because I've gotten a lot of info in advance.
Because Michael has a lot of information.
Collected, I had their payoff, I had their mortgage statements, I had their survey, I had their tax record. We had photos of the contents of the house and the damage all already on a zip drive for them. So it was ready to go.
Well, that's good because we are hearing horror stories out there. Actually, my niece, the FEMA guy showed up. She had a foot of water in her home, and they told her that part of the home wasn't flooded and that was still livable, and so they were denying her claim.
Yeah.
There was a lady who was offered $30,000, and she told them that wouldn't even come close, which is really the maximum they give. And their exact words to her was, "It is not our job to get you back to your life of luxury."
Right.
It's pretty harsh, yeah. Another person was denied. They had 4 feet of water in their home, so you couldn't just go up 4 foot of sheetrock. So there are no walls on the first floor because it raises up 4 feet because sheetrock is made of partial paper. And what they did is they told him that you can live upstairs, and so he got nothing. Scary stuff. So here's the thing, FEMA is not here to replace our lifestyles. If you really think about it, FEMA's not really here to help. They don't have to help us with anything. I mean, they're not an insurance company. They're just a company, they're just an organization that's going to help during a disaster. But there's going to be so many people out there who are relying and banking on, because we had a 1,000-year flood, that are not going to get any help, right? And so, and even some flood insurance, I've got a tornado went behind one of my rental homes and took off half the roof. And so we're having to, we're in the process of doing all that because I have a rental house on 99 and 6 tornadoes went right at 99, okay? So what I want to do today is give you guys a little bit about the types of loans that are out there available for the people that need help, because there was a lot of information on the internet that is wrong. I just had one the other day with an agent that I know at an office, a RE/MAX office, and I said, the flyer you just posted from your lender is incorrect. It talked about one of the renovation loans up to $424,000, and then went on to proceed to talk about how it was an FHA loan. Well, guess what? The county limit here in Harris County and surrounding areas is only 321. So that is wrong. So if someone calls her thinking they're going to get up to a $424,000 loan, that is not the county limits. Now there's a little asterisk over on the bottom right-hand side about this big, but I mean, let's be honest. When someone sees 424, they think they have an option. All right. So let's get going. All right. So, we're going to talk about the 203Hs, but a lot of people have been talking about the 203Hs. The 203H is the 100% financing, okay? We will talk and touch on that, but you're not probably going to see as many 203Hs as you're going to see possible renovations, because you have thousands and thousands of people that are going to have to fix their homes, all right? You guys also have a lot of investors, I would imagine, that are out there offering people.
Right.
Yes. So what you can advertise to your investors is you have loan programs that they don't need to go. They can buy it today cash and sell it with a renovation loan. Make sense? So now they don't have to fork over. So let's say they had $1 million they're going to go invest. Instead of them having to buy 2 homes or 3 homes and front all the rehab costs, they can go out here and buy 6 or 7 homes. Makes sense? They can buy them and then you're now selling the renovation process. But renovation financing is just a one closed mortgage that incorporates the home purchase, so these can be used for purchases, the renovation costs and fees all into one payment and one process. These things have been around forever. We as a company have done a lot of them, but I'm going to be real honest with you, a lot of companies don't. A lot of companies have them, but they don't do them. I will tell you that we used to call these things in our business the real estate agent killer. because nobody wanted to do them because you guys get angry because they take longer, right? And there's a lot of bad information, and since no one's ever really been an expert. Now, we, as a company, made a decision a few years ago to get into this particular side of the business and become an expert because it was an underserviced market, all right? Now, we also have branches in areas that have gone through catastrophes before, so the thought was, okay, we should get really good at this. So this will allow your buyer to purchase a home and renovate it without all the out-of-pocket expenses, right? That's a big deal, like you said. I mean, right now, cash is king, all right? So how long does it take? The average renovation loan will take 45 to 60 days. And I'm gonna go into what that process looks like, but in our world, we're so used to saying 30 days or less. Nobody wants to hear 45 or 60, but you're gonna have a lot of folks out there that need to sell their home for whatever reason. 45 to 60 days is better than 6 months to a year because they have to do their own reno, okay? So, why use a renovation loan product? So obviously limited inventory. Now, limited inventory used to be just limited inventory. Today, it's maybe limited dry inventory because there's a lot of homes that are damaged. Aged housing. So doesn't sound like that's the scenario in your listing, but if you had a home that's been sitting and sitting and sitting, why not advertise that you can do a renovation loan on this and make it exactly what you want? You got a dated home with a dated kitchen, deferred maintenance, build equity, influx of foreclosures and short sales. You guys are about to see a huge influx of foreclosures in the next 12 months. I'm going to explain to you why. It's going to be good and bad, right? But we want to offer solutions for people because they don't realize how bad a foreclosure and how long that haunts them, all right? Energy efficiency improvements, cash to be used with cash only, so non-mortgageable homes. Eliminates the needs for buyers to fund repairs. So even little bitty things, okay, cosmetic things can be done up to $5,000. It has to be a minimum of $5,000, but let's say that the home doesn't need a lot of work, right? But they're like, oh, I gotta put in new carpet or new wood or new this. Why not sell them on a renovation? I guarantee you your competition is not an expert. They're not even close. They're not even talking about these programs. I mean, y'all been doing this a while. Have you heard anybody in your office go, let's go do some renovation loans? No, not at all, right? But they're really not that bad if it's explained properly. So make a home your own, that's pretty self-explanatory. Okay, it can be used in conjunction with pre-inspection. Now, the cool thing is renovation can be used for purchase or refinance. So, flooded market with homes that need work, renovation loan. People that want to stay, fix it up, we can refinance them into a renovation loan that then becomes sellers for you at a later date, all right? Because some people don't want to take the hit today, they'll do this because they know if they just fix it, the aftermarket value is much higher, all right? And then increasing the borrower's comfortability in the transaction. All right, so here's the type of renovations that we have. We have an FHA 203K, we have a VA renovation, we have a home style, which is a conventional, which is that's the one that's up to the 424, and we're gonna talk about each of these. The one we're not gonna really talk about today is the one-time close. We do offer a one-time construction lending product. So if you have a buyer going to buy a purchase, to buy the land and a custom home with a build on your lot builder, or let's say they already have the land, we can do that. Now, what the products we have a construction lending product that is as little as 10% down up to $1 million. That's a really great product because most construction lending for custom is going to be 20% down, all right? So we can even do lot acquisition at the same time. So you want to buy a $100,000 lot, build a $500,000 home, we can lend you all $600, you're only coming out of pocket with 10% of the overall project versus the 20 or 25%. So this is a big deal. Eligible properties, so loan limit guidelines. So they have to be stick-built properties, okay? Modular homes do qualify. Do you guys know the difference between modular and manufactured?
No, we don't.
No? Okay. So a modular home is built in a factory, but is job built on site, meaning the walls were put together, but when they go out, it comes in a truck in pieces like a puzzle. They put it together on the job site. It's basically frames, trusses, things of that nature. It just speeds up the construction process. Plus it's like an assembly line. They can basically make it more efficient. A manufactured home came in on wheels, okay? It typically has a hitch. It's funny, if you've ever sold a mobile home, in order to get a mortgage, you have to cut the hitch off. And so we actually have to have an inspection to make sure that it's been removed. But those are the ones you see where they come in two big pieces and they just put together. Those do not qualify. There are loans for those types of homes, but not renovation loans. And we actually don't do mobile home loans, because if you can drive it off your lot, it's a depreciable asset, not appreciation. Condos are available, log homes, 1 to 4 units, so FHA is 2 to 4, and then the 417. Maximum loan amount per FHA county guideline, so it's $321,500 for pretty much anywhere you guys are going to sell for the most part. We are not in a high FHA area. So the home style, second home, and investor products are available. So if you have investors, this is where they can use the home style loan. That is the conventional loan, and they can use their money to buy the home and then finance in the repairs versus trying to lump it all together. But this is for buy and holds. This is not for flips. If you're going to flip, you need a hard money loan. All right. Are you guys familiar with hard money loans? I know you are. Hard money. So a hard money loan is a private investor, whether it's an equity firm, whether it's a group of, the 5 of us. And it's typically going to be 2 to 3 points on the front end. So they're paying, so $200,000, you're going to pay $4 to $6 grand just to get your money. Plus typically about 15% monthly or 15% annually. So, $100,000, you're paying $1,400 a month interest only. I have done a hard money loan. I did a flip last year, and I took it from a friend who charged me only 2 points up front and 10%. It cost me $1,000 a month in interest only. So I was in a similar situation like you. The market turned once I got my renovations complete, and I was paying $1,000 a month just to hold it. It took me almost a year to get rid of the house. Just like your buyers, ego and pride, because of the $30,000 in beautiful renovation I did, I should have been dropping it. I dropped it, but it's still sad. We had 30 showings. I should have dropped it $1,000 a week till I sold. I did that, and about the 4th week we sold it. So, difference between making money and losing money. I wrote a check for 15 grand to get out from underneath it. So you guys need to be the experts. I basically took a $15,000 education, but if you've got buy and holds, which people do as well for rentals, this is a great way to pick up some cheaper rentals today because people are trying to get out and fix them. 203K limited. Okay, so this is where some confusions happen. There is 2 types of 203Ks. We have a limited and then we have a full. The limited is up to $35,000 max. The full is up to 110% of the value. So you could put up to the loan limit. So if you have a $100,000 home, you could technically put $231,000 in renovations. All right. Now, have you guys ever heard of these loans? Mm-hmm. Okay. Because here's where the misconceptions happen. There's misconceptions, and I'm even on the lender side. I've been doing this a long time, and I had misconceptions. One of the misconceptions is that every contractor has to be approved by the investor. Have y'all ever heard that? Mm-hmm. That's not true at all. Like at all.
So they don't have to submit the...
No, so here's what you need. So write this down because this is very important. This is where other lenders, now don't go tell your other lenders who don't know how to do these. So don't go tell Michael if he's watching. Although I like Michael. Michael and I are friends. But here's what I learned in getting into doing these. Every single loan over the $35,000 requires what's called a HUD consultant. There are only 8 in the Houston and surrounding areas. The HUD consultant is the one that comes out and meets with you, and then you tell them what you want to do, and you get them all the information, and then he basically prices it out and says whether or not the repairs or whatever it is, what the value is. The contractors report to the HUD consultant. He's basically like the GC on your job, all right? So he's the one that has to speak to the appraiser to talk about, how much value it's going to, this is what it's going to cost versus the value add and all those types of things. So what we have done as a company that's a little different is we have reached out to all the HUD consultants, knowing that there's only 8 of them, and started putting together teams. Our goal is, now, under $35,000, you do not legally need a HUD consultant. But I would encourage you to get a HUD consultant because you need someone to manage these jobs. All right. So what we decided to do, to the best of our ability, is to have a HUD consultant on every one of our 203Ks, and we want the HUD consultant, the real estate agent, and the buyer to all have a preliminary meeting to go over what wants to be done. Because the biggest problem and why people get so frustrated is it's construction. Things go awry. If you've ever built a home or had someone, one of your clients build a home, even in new construction where they do it every single day, you always have problems in construction. So what we want to do is if we believe that with a HUD consultant who is managing that project, because he only gets paid as the project completes, because they're taking draws just like a construction loan. all right? So the HUD consultant is the number one player in all of this. If you don't have one of those, you're in trouble. The trades only need to have general liability insurance of $1 million and be able to have a proven track record that they can sustain the draw payments. Make sense? Because let's be honest, a lot of these guys are not gonna be able to go 6 months without getting a check, or 3 months without getting a check. The ones knocking on the doors are like, if you give me $2,000 today, I'll do it. Well, here's the problem. My father-in-law got scammed out of $4,500 2 months ago. My father-in-law is almost 85 years of age. He's widowed. He has a roommate who's like 90. So you can imagine how efficient they are, right? So a company came out and resurfaced his driveway. He lives out in the country, charged him, I don't know, $1,500, $2,000, whatever it was. Reasonable. Nobody had an issue with that. We're like, oh cool, you got a new, asphalt driveway. You live out in the country. Great. We come back like a month later. One of the workers on that job saw that they were old, came back 2 weeks later and said, you know what, Mr. Rocky, you need to seal this so you never have to do this again. Now, he's 85. The chances of him ever having to redo that again, and he's not even in good health. So the chances of him ever having to redo that are slim and none. But the guy didn't tell him what the price was. He said, I'll do it for $35 a foot. He came back in, I kid you not, like 42 minutes later and said, that'll be $4,400 and whatever dollars. And my father-in-law paid it. Because the guy sat down, spent time with him. You're gonna have people, if you've spent any time out there volunteering, you know there are people in a bad way. They're looking for a friend. And there's a lot of people that are gonna take advantage of them. So what we're trying to do is, you wanna do more of this type of business, start befriending contractors, because they're getting the phone calls. Sellers are gonna need people like you to help them sell, but they're contacting the contractors first. So what we're trying to do is build teams where we say, hey, Mr. Contractor, if you go out there, you could say, hey, we can fix all this stuff, or you could sell it, and we'll still fix it, but you could sell it with my friend over here, Christy, who knows all about these types of loans and who can market it, and then you can just be done with it, all right? So that is a big mistake and a misunderstanding. A lot of people don't understand that. This is where a lot of people are gonna make huge mistakes, which I'm pretty excited, because that means we're gonna basically have natural attrition, because let's be honest, you guys are finite. You guys are fickle, right? They screw up a deal for you bad, you're like, forget that person, I don't care if we've had a 3-year relationship. This is gonna happen. There are places that they don't close these loans for 90 days, 120 days, 6 months, okay? Because they didn't take the time up front. That's where the HUD consultant comes in, and the real estate agent, the buyer, and the lender come in to have that team. So now we're gonna talk about what it is, the benefits, the big difference between the 203, because there are some major differences, and the guidelines and timelines. All right, so 203K is a HUD primary, it's HUD's primary program. HUD is the Housing and Urban Development. So it is the rehabilitation for a repair of owner occupied. So you cannot do investment on the 203K. I've seen that on the internet, well, social media, right? Everyone's an expert on social media. Purchase and refinance, it is rate and term only, you cannot pull cash out. Now, we still have the traditional cash out options here in Texas. Are you guys familiar with cash out refinances for borrowers? What's the maximum loan to value?
I don't remember.
80%. So if you have a house that's paid off and you have a $200,000 home, you can borrow up to $160,000, okay? That's important. I want you guys to remember that, because when I go into the Fannie Mae Home Style, this is a reason that this is such a great program, because you're gonna see the big difference.
Okay, I have a question while you're moving forward.
Yes.
So all these are based off of the value of the home, or the AVR, the after repair value?
Yes, all of the renovations are based after the after repair value.
Okay, so here's the big question that has been circulating in our world that we're having a very hard time with, is how do we figure out the AVR on a flooded home?
So,
Like your River's Edge neighborhood where
people
everybody flooded.
People need to do it now, because there are good comps in the last 6 months. The longer people wait, which is why you need to be out there spreading the word. What's probably going to happen? I did a $500,000 home, it was like 600, I think, that had a airport, a runway through the neighborhood. 16 homes, every home backed up to the runway. Everybody had their own air hangar. There's only 4 or 5 in the entire city. And when I say city, I mean like every surrounding area. You've got one here in the Fulshire area, Richmond area. It's pretty cool. You've got one in Manville, Alvin area. You've got one in Friendswood, and I think there's one up north. That's it. comps are a little tough to come by. So what an appraiser, from my understanding, has to be able to do is have a logical conclusion. Meaning, they're gonna take a home that didn't flood, right? And that's where you gotta get out here and get in front of these people, because as they start selling these homes as is, it is going to hurt the value, all right? But what we did on this one is we took a home, I think there's only 16 homes in the whole neighborhood. Like, they sell like one every 10 years, because if you got an airplane, you need a place to store it. So what we did is we went to Friendswood and got one with a hangar. Then, this one was in Manville. Then we went in Manville, where we had one on 2 acres, similar size there. And then we came up here and did, so what we had to do was basically piecemeal it together to say, you know, in theory, we should be able to justify this. We had one appraiser though that couldn't do it. We had to get 3 appraisals because it was so unique. It required 2. But one of the appraisers came in $100,000 less because he didn't give any value for the air hangar. I don't know what the hell the value of an air hangar is, because it's not like a pool where people go, oh, it's $35,000, right? Then they're paid 100 or 50. It's 35. There's a standard. There isn't that for an air hangar and a runway. So I think what you're going to see is they're going to have to get a little more creative. They're going to have to go, like for River's Edge, they could go down the street they might have to extend it past 2 miles and go to where that home, it didn't flood, but it still goes to the same school district, it's the same square footage, and use some of those. So it's going to get a little creative, because that's our concern too, is appraisals, okay? But this is why you want to be out in front of the curve, all right? So here's the benefit of the 203K. It is only a 3.5% down payment program. So someone can get in, and it's the 3% of the ARV after repair value. All right, so affordable, cost-effective means they can get the stuff that they want. This should expand some homeowners' opportunities. Tool for communities and neighborhood revitalization. You know, when we had this presentation before, it was more like, you know, if you want to buy a home in Old Katy that was like 100 years old, you could use this. Well, now obviously used for flood victims. Allows you to use FHA financing for properties that would otherwise be uninsurable or unmortgageable. So the way this works is an FHA loan, the home has to be move-in ready.
Right.
Right? This allows the home, literally, you could pick it right now at studs and close on a home. And I'm also going to show you here in a minute, you can defer the payments up to 6 months. Everything gets rolled in. You can finance in the first 6 months of PITI. Or PI, sorry. So I'll show you that. So someone can buy the home today and not make their first payment for 7 months.
So when you close a home, because we know FHA has to, the house has to appraise the sales value in it. So they could go and see, okay, this is gonna be like that. This is the proposal, or?
Yeah, so I walk in and you have no walls, right? I can still close on that home. And based on the drawings, that's why the HUD consultant, that's why the HUD consultant's so important, because he's the one there advocating all the repairs. And then that's why he gets with the appraiser, and then the appraiser says, yes, based on these repairs, which this person is responsible for, we believe the house is worth this. That's why they'll close.
Okay.
So all these folks that have damage can now either sell or still get into a home. You might have buyers that have been holding off because they haven't found that perfect home. Well, now they can go out there and find something that needs a little bit of work and have a good option, okay? Provides the ability for the market properties that need updating. So there again, you're gonna have some places that didn't, some place that has wallpaper still, or has, olive green, traditional from 1972 appliances. I mean, you can roll in appliances and things like that too. And so this obviously constantly increases property value and equity, all right? Because updated homes sell better. I mean, HGTV told us that, right?
And so they don't have to, or they didn't have to be flooded in order to take advantage of this.
Correct. Yeah, this was actually, these have been around forever.
Right,
It's just,
okay.
they now make a whole lot more sense for, 80% of the population, where before it was a very small, population. We did a lot of these, and the only downside to any of these programs is there's not a jumbo renovation. So I'm not doing any presentations in, Garden Oaks, where the average home's $800,000. That's not gonna help. Those people go get private money loans to do those, or they just go get a traditional construction loan, and then we modify them out. This is gonna work really well where we live, because 80% of the population is under 400 or 331.
And then
Okay.
what's like an interest rate on something like that?
It is a little bit higher. We looked at one, the 203 was probably high 4s versus low to mid 4s. But here's the thing, because there is a little bit of risk in the fact that what happens after 6 months when this thing is done, we're lending on what we think the ARV is going to be. I mean, there's no guarantee. Okay, so it's just a little bit higher, but it's not bad. I mean, it's still very reasonable.
And
I'm sorry, go ahead, Leila.
I'm sorry. So have you talked about which new requirements to get the loan for this property that have been affected? You know.
There are no new requirements. Everything's the same. That's what I'm saying. The biggest difference is you need the HUD consultant to work up the bids.
Okay, so.
But to qualify for the home is identical whether you go buy a finished FHA home or you do a 203K. The qualifications don't change.
Okay. Because so far, what I have been advising people affected is, you know, do the right thing, go with the certified mold remediation company,
Yeah.
get your certificate. But it is required for you
Yes.
in the future to get.
Yeah, and you're going to see that because some of them will allow you to do some of the work, some do not. Some allow you to have a family member do the work, some do not. So that's where we're going to get to the guidelines because that's where it gets a little sticky because some people are like, oh, well, I'll just go, you know, I'll do it and I'll get the money and I'll just do everything myself because I'm a contractor. Yeah, you can't really do that. So,
Okay, so I've been talking to some folks that have insurance claims in,
mhm.
and they're like, we know, I've got 3 in Canyon Gate.
Yep.
We are not moving back there.
Yep. So,
But they're like, we don't know, do we wait for our insurance claim to finalize and do all those particular pieces? So I'm like, well, according to your policy, if you don't own the home, they don't have to cover it.
yeah, we're recommending that people wait. I do believe that once it's in processing and going, that you'll still get your money because here's the thing, you had to take less for your home because of the incident.
Right.
So it's just basically supplementing what you had to take less for. But we are recommending if you can stomach it, you really need to stay because the insurance companies can get squirrely and they can just say, no, sorry, you know, and so we're not insurance guys. I actually have a call into my insurance because we have a client concierge program where we get every one of our clients 3 insurance quotes. And so we've reached out to our 3 companies that we have done a lot of business with. And so we've asked them, how are you guys paying out? You know, how's that work for you guys? All right, so here's the limited. Limited is intended to help facilitate uncomplicated improvements or repairs on the home that do not require plans, consultants, engineers, architects. These are non-structural, right? Under 35,000. The minimum is 5K. These are under 35, so you don't have to have the HUD consultant. We're still recommending that you get it because you need someone to manage the project, but you don't have to. But this is for non-structural. That's a big deal. Basically cosmetics, all right? Self-help is allowed with a work write-up and a sign release. So if you have a HUD consultant, you can present your plan, your budget, your everything to them. They can authorize you to do the work. That's why we encourage you to get a HUD consultant. Like, you know,
What is the cost of getting a HUD consultant?
we're going to talk about that. Anywhere between $500 and $1,000 for the entire project. So it's just an added fee. Okay.
That's the first question people are gonna ask.
Yep, it's going to depend. Probably on how much work needs to be done. It's probably based on that. So now here's the thing. On this one, you can only have a max of 3 contractors. Because if you think about it, if it's cosmetic, you shouldn't really need more than 3. 2 draws dispersed per contractor. This is kind of just behind the scenes stuff. The first draw at or shortly after closing by the lender. Like I said, this is for not flood people. This is if you wanted to, replace your kitchen with a, build a media room, something like that. Okay.
How about pool?
We're gonna get there. Because no, you can't do it on 203K, but you can on the home style. So full 203 can be used for cosmetic features, but it is the only option available for structural, which is what you're going to see a lot of folks needing to do. Structural repairs and/or repair costs exceeding 35K, but there's not a max. It's up to the loan limit. So obviously, if you're someone with a lot of equity and we can get the ARV there, this is going to be a great option. This is where there is no self-help or family. You have to have licensed insured contractors. That I did see on social media where, oh, you can do it yourself. Not on everything. So for someone like me, whose brother-in-law is a contractor, I could not use him. Because what could he do? That's a $100,000 job, and then he does it for 50 and gives me 50. You know what I mean? Like, it just has to be legit, right? Keep everything above the line. Now, here's why it's cool. You may finance in 6 months PITI. Here's why. What's going to happen? These people have to live somewhere. So they're going to have a mortgage on their current home, and they still have to live somewhere. That's going to be really tough for a lot of people. So these ones over 35,000, because for the most part with these, you can't live in the home. Cosmetic, a lot of times you can live in part of the home. These are major renos. So we roll in 6 months PITI. Okay. So they close, they get to move in, they have $100,000 worth of repairs. They do not pay for 6 months until it's done, because for these, the work has to be done within 6 months. Okay. Max of 5 draws. There again, that's kind of behind the scenes stuff, but you can just see the big key here with the contractors is they have to be able to sustain the draws. That's going to be the toughest part, because a lot of these folks, let's be honest, right now, anybody with a truck and a hammer is a contractor. It just is what it is. It's scary times. So, you want to use folks that have been in business for a long time. And there is a final. All right, recommended for 203 limited and required. So, paid at the time of service for the borrower. So, this is your HUD consultant. $400 to $1,000 is what we've seen, probably based on work. Their job is to inspect the property. They're going to determine the fair market price for project costs. They're going to make sure, one, that no one's marking it up, or two, that you have enough in there. They're going to supervise the rehab. Now, most of us are not contractors. Most of us are not GCs. We need somebody to manage that project. The reason they do that is you only have 6 months to get it done. We've all seen the shows on HGTV where they go in, right? And they're like, well, I started this kitchen remodel 2 years ago, but my husband has a job and I have a job. And I mean, first time rehabbers or whatever it is.
Where can we get a HUD consultant?
So you can actually go to HUD's website. You can go to Google and type in HUD consultant for Houston, and it'll on the HUD page, and it'll tell you every single one. There's 12 on the page, but 4 of them are inactive. So if I was a contractor, I'd be figuring out how to become a HUD consultant, but we don't want to tell everybody that. But here's the thing too, I would share this with your buyers and things like that. I would. So if it's me, I'm making videos saying that I have now become much more versed in what needs to happen. Contact me for more information. There's a lot of real estate agents out there that do not understand how to get these things done. The first thing you're going to say is, have you ever heard of a HUD consultant? They're going to go, no, wait, what the hell is a HUD consultant? Right? That's your opportunity to shine.
And even as a listing agent, this is a great tool because you can show
Absolutely.
it.
Oh, yeah, absolutely. All right, so they're going to perform draw inspections, right? We want to make sure that the work was actually done. Big deal. Certify that the project is complete. I mean, think of them like a builder. Their job is to come in, manage the project, make sure it's done properly and up to code, because when it's done, it should be the same as what we would expect on an FHA, on a traditional home, right, when it's done. They'll work with the borrower to keep the project moving and on schedule. So here are the eligible repairs. I write some of these down. So roofs, gutters, and downspouts, HVACs. See, the misconception I had, so I've been in real estate, guys, for 16 years. I worked for a home builder for almost 10 of those. I've been the mortgage side for over 5. I've had my own mortgage group for the last about 4.5 years. I did very few of these loans until I came to this company, because I was always told that they were bad loans, they made you guys angry, you're gonna destroy your career, and you really can't do anything with it. Unless it's like paint and sheetrock, you can't do anything with it. Look at this list. You could literally get a new HVAC unit. I paid $8,000 to get a new unit and all my stuff done. And then I financed it at like 18% on whatever credit card, Carrier, whoever the AC guy, where I could have refinanced my home potentially. It became tax deductible at that point. Lower interest rate, skip 2 payments, right? I mean, because 10 grand, 8 to 10 grand is a lot. Flooring, minor remodeling. Now, here's what I just thought it was: painting, interior, exterior, lead-based. You could do windows and doors. Now, not as prevalent today, because a lot of the homes in where we are today are double pane. But go sell a community that's 15 years old. Those are single pane windows. Imagine if you were telling your buyers, hey, you know what? You want to make this home pop? You want to make this home sell? Christy said it earlier. You want to know why you should buy my home? Because it's been completely renovated and we're energy efficient. Do a loan like this, and in 6 months, sell. Spend your time updating and sell for top dollar. Okay. Septic and well. It's a pretty good, big deal. That's 10 grand right there. Fencing, landscaping, appliances, modifications for disabled homeowners. Used to, we thought the only people that got any sort of disabled benefit was the vets, because there is an opportunity that you can roll in certain repairs and ramps and things like that for a disabled vet at a certain percentage of disability. Well, here's an example of an aging parent. They're buying a home. Why put all their money out of pocket and put 20% down and try to pay cash to modify the home? Why not come in at 3.5%, keep your cash, because guess what? You're going to need it if you're at retirement age. Exterior decks, patios, and porches. Now, obviously, this is a nationwide presentation for Hancock, so basements, remodeling. We're allowed to do major renovations, structural. You can actually use this to add another room. You could actually use this to add a garage apartment, which you cannot use. You can use it for pools, but only on repair and fill-ins. You cannot build a pool. Okay, that's a big misconception too. Here's the ineligible. Major rehab. So on the major rehab, you gotta go full 203K. Structural's full, room additions full. Obviously, they're over 35,000 and they're structural. Repairing, requiring drawings, all on full. You know, now here's the thing, just at the bottom, the luxury items. These are the ineligibles: the gazebos, the tennis courts, the spas, the outdoor kitchens, and the pools. Right? It's meant to enhance the living. Yeah, I'm not here to bring your life back to the luxury that you're used to. No, I mean, you know, like, but the next one, you can add all this stuff. All right, so here's the loan limits: 331,500 is us here. Maximum loan to value, so 96.5. That means a 3.5% down payment. Where else are you going to be able to do a renovation, get the house you want? I mean, hello, who the hell doesn't watch Fixer Upper? I mean, think about it. You think everyone on Fixer Upper has a budget of $100,000 in cash in Waco, Texas?
Yeah.
No, they're doing stuff like this, and it closes and they get their money. Let's not kid ourselves. But I guarantee you that the average consumer thinks, I wish I had $50,000 or $100,000. You don't need 50 or 100. You need like 10, which you should have a down payment anyway. So right here is a cheap way, cheap's not a good word, a less expensive way to get in. Now, on a refinance, we can actually go to 97.75% of value, so that's super cool. Now, this is what Christy asked. The loan to value is based off of the as-is appraised value plus the total rehab cost, right? Use sales price or appraised value, whichever is lower. So you're gonna get it, so the appraiser's gonna come out and say, this has no walls, and as it sits today, it's worth $150. But if we do all this stuff the HUD consultant said, then it's worth this. That's the number that you're going to use, and then back into that 3.5%, because that's either gonna, now, they might say it's worth $250, but you decide to sell it for $230. We're gonna use the $230 amount. It'll be the 3.5% of the $230. So standard FHA credit, this is what you asked. Standard FHA credit applies. 3.5% down payment, purchase plus renovations. We do a 620 credit score. Now here's the cool thing. A lot of these folks that are going to be buying these homes are a little cash sensitive because the car flooded or they have a friend or a family member that flooded. This is the exact same as the current FHA guidelines. So you can come in and you can buy, you can still get in with 3.5% down and roll in if the seller will pay, of course, if the home appraises, up to 6% contributions. Okay. 6% should cover pretty much every single closing cost and prepaid and everything. Now, what I do with my referral partners, if you're gonna make an offer on a home, what we do is we run a sample scenario and then I tell you, hey, go ask for approximately this. Because the way that works, you do know is if you don't use it, you lose it. It goes back to the seller. You don't get a principal reduction. You don't get a lower price on the home. None of that can be negotiated after the fact. So what I try to do is, I try to get it as close with a $500 difference. I always try to go 500 under, because if I'm off a little, you know, maybe you bring an extra $500 to closing, but if I'm off a little, you're not gonna be losing $1,000 or $2,000. Nobody wants to do that, right? Because they technically financed it in. All right, any questions on the 203K? No? All right, so the homestyle renovation allows buyers that are conventional buyers and investors. So this is where you can really differentiate yourself in the marketplace. Then this shift is now you have something to offer up to your investor clients. This loan does not carry upfront MI and regular MI. Oh, I'm sorry.
Mortgage.
Yes. Regular PMI that is canceled at 78%. So it's basically a conventional loan. So both of these loans are, it's either FHA or conventional, just with a renovation component. Okay? The only difference is like what I said, what you can do. Now, here's where a big difference of this one is. Borrowers are able to make renovation, repairs, or improvement totaling 50% of the as-it completed value of the property with the first mortgage. That's the catch. That's why the 203K is actually probably better at the 2, because it's dollar for dollar. So here, as completed value of the home 200, total repair cost can only be 100. So purchase, rate, term, refinance, there's no cash out. Now, here's what makes this one good. We've done a lot with pools and things like that. So it's offered on 1 to 4. Obviously same on investments. It can be existing or new, condos, townhomes. If we need to get, the renovation work must be permissible under the bylaws of the HOA. Work is limited, these are for condos. But what I'm gonna show you here is this is what makes this a really good program. Manufacturer's still not eligible. Seller concessions, 3% and then for 5 to 10% down payment. You can do a renovation loan conventional with a 95% loan to value. That's a big deal. You can do a refinance with a 95% loan to value. That's a big deal. A cash out in Texas, it's called a Texas A6 cash out. We're one of the only states that does not allow you to borrow more than 80% value of your home. Where you used to live, you can go up to 100% value. There are some places that will allow you to go to 105% value. We in Texas, because of our homestead laws, only allow you to go 80%. Which I don't know about y'all, but that's the reason we didn't have the recession in the housing market like California. Because people didn't all of a sudden who were yanking money out, yeah, they weren't so far upside down. All right. And then maximum 6% for more than 10% down payment. So that's a little different. So that's super cool. Mortgage insurance is required, just like a traditional one, standard MI. So that doesn't change just because it's renovation. This one, family contractors can be used. That's why I want to do the presentation.
Which one is this?
So write this down. This is the Fannie Mae Home Style.
Okay.
So Fannie Mae Home Style is a conventional loan, up to the 424-100.
Okay.
Look,
Right.
and this one, luxury items can be done. Pool, sauna, landscaping, gazebo, tennis courts. Appliances must be built in. Basically, you can't steal them. So if you're gonna do a kitchen renovation, you gotta do built-ins and things like that. Okay. So, but this is a great loan because it's only 95%. If you've got someone who wanted to make repairs or wanted to buy that acreage community and wants to put in a pool or a tennis court, we can roll everything in all at one time. Make sense?
Mm-hmm.
It's basically a big giant escrow holdback.
The thing with that one, you have to be careful about though, if people are wanting to do pools, because I've used this one,
Mhm.
is when they're going to shop, they can't go pick a $125,000 pool because it has to appraise.
Well, just so you guys know too, you can't do that on the other side too.
Right.
Like, so the way they do it now, what happens most of the time is they send you to a bank to get a second lien.
Right.
Well, the second lien has requirements too. So the biggest problem you run into people is if they're not putting a bunch of money down or they don't have equity in the home, putting some crazy expensive pool, no one's gonna lend them money because it takes them over what the house is worth.
Right.
The advantage to this though is you don't need 80%, you only need that 5%. So you can get maybe an $80,000 pool instead of $30,000 pool. But yeah,
Right.
you're absolutely right.
So I've had people buy new construction, like in Firethorn and other
Yep.
areas that have done this, and they just wanna build their pool right all into their loan and have a great time, but they wanna go build the fanciest pool in the entire history of the world. And there isn't a pool like that in the neighborhood, so the appraisers lower the appraisal value.
Well, and you're already, on a new construction, you're already kind of at top value of the neighborhood.
Right.
I mean, because you're not buying a home that someone let go under market value or anything like that. Yeah, like I put a pool in my house under new construction. I put a lot of money down so I could roll in, and then I went and got a second, yeah. Because it was 6 half a dozen one the other kind of thing, so. Because the very first pool I put in, I had to wait almost a year to get enough equity and pay enough down to have enough room to even do like a $28,000 pool. Because I bought new construction, and they're like, the neighbor, you'd be $20,000 more than the next house, same house. I'm like, okay. My thought was, okay, you're not giving me money. So,
Well, they are good if you just do a little research on the front end and look at comps with homes that already have pools, then you can kind of say, okay, this is where you temper your expectation on that drain pool.
well, and here's the other thing too. So what I encourage my referral partners to do is, so I'm gonna argue both sides of the fence, right? So if you're my referral partner and you're selling, right, I'm like, or you're buying, and we want something like that, get me the comps, but I want the appraiser to reach out to you. See, I can't talk to the appraiser, it's against the law.
Right.
All right? If you're the buying agent though, and my appraisal comes in light, what we do, we don't ever just send it to the buyer. We contact you first, and we use terms like the appraisal came in a little bit light. I need you to go back to the selling agent, and I need them to they have to justify to me where they came up with that price. Because remember, I'm on your side. I'm totally fine with us knocking 10 grand off, right? Because if you can't, we're in a world of validation, whether it's my world or your world, so why would we ever want to, and your job's to protect the buyer, so why would you ever want them to overpay, you know, kind of thing. So that's something that we do that's a little bit different. We even do that on FHA. So, because you know, once an appraisal goes into FHA and VA, it's locked in for 6 months. That's a big deal. On VA, which we don't talk a whole lot about mortgages, but on VA, you have what's called Tidewater. This is very important to understand. Tidewater is totally off the subject, but on Tidewater, the VA appraisal reaches out, especially for you that's new. You have 48 hours from the time they send the email to issue a rebuttal and provide comps, or it's done. There's no going back. There's no nothing. It sits on that address for 6 months. 48 hours. That's it. Now, 48 hours from the time you picked it up, from the 48 hours from the time they sent the email. So what I had one time was an agent that I got it, 5 minutes later I sent it to the agent, okay, I'll work on getting comps. 4 days later, comps come in. I'm like, sorry. And on my email, we have 48 hours. Like, there is no around this. Because, let's be honest, our job is to protect the consumer. So, and if it took you 4 days, one of two things. Either you stink, or it was overpriced to begin with, and you were really trying to find some comps. Because, I mean, you guys are professionals. You can get a CMA in an hour. So, anyway, just food for thought, because that does happen sometimes. Now, this is the one everyone's talking about. So the reason why I do renovation loans first is, let's be honest, most people are going to be in the renovation market. But let's talk about 203. This is what you've probably seen on everybody's news feed. This is like, this is going to change our industry. Yeah, no, it's not. All right, it's not going to change our industry. It's a good program. So here's what it looks like. It's 100% financing. Woo! Zero down, right? But guess what? It has closing costs. It has escrow. It is not a free loan. All right. Now the real caveat here is they may be qualified to victims of major disaster who have lost their homes or in the process of rebuilding. This is where I saw so much misinformation at the very beginning. It was like, oh wait, if we're just buying in a disaster zone, we can do this? No. Your home has to be deemed uninhabitable. How do we document that? Insurance claims, pictures, all that kind of stuff. That's where a lot of people were missing the boat at the very beginning. Now, I think some of that's cleared up, but buyers don't understand that. Now, the cool thing is, too, is this applies to renters.
That's the real benefit.
That's the real benefit, because guess what? Those people can do something. Now, what I want to talk about this, so you can roll up into 6%, which is great, but here's why I want us to talk about this for a minute. This is what's going to cause our foreclosure crisis. Do y'all know why? I bet you know why. So, your home floods, you want to go buy her home. If I can deem you are eligible for this program, I don't have to count your current mortgage against you to qualify for her home.
And now you have 2 mortgages that you can afford to pay for.
Well, in 3 months you do. So what happens? So you have a $2,000 a month mortgage now, you're gonna go buy hers, it's another $1,800 or $2,000, and in 3, because you got a 90-day reprieve from the bank, so you're like, woohoo! Oh, by the way, hopefully they don't report you late and ruin your credit, but let's just say that they didn't. So Wells Fargo, if you didn't see my video, Wells Fargo gave everyone a 90-day reprieve, and guess what they said? After 90 days, we want all of our 90-day payments plus your new payment. It was in the fine print. What they said was, is you should have your insurance money by then. Oh, wait a second. I didn't have flood insurance. And oh, FEMA didn't give me any money. Oh, and now I owe $6,000 in mortgages plus the next month, so I owe $8,000, and I just went and bought a new home. So I owe $8,000 to Wells Fargo, and now I gotta start paying for my new home. I don't have $10,000 this month. This is going to create a foreclosure epidemic in the next 8 to 12 months. Without a doubt. So, Christy was in the business. We used to have a thing called buy and bail. Remember that? So, buy and bail worked fantastic with new construction. Probably worked well in resale too. So someone would come into a new construction, right? And they'd be like, oh, do you have a home to sell? And you're like, yeah, I do. But I really want to buy your home. Well, that's great, because at this time in the market, all we have to do is have a lease. We don't have to have it People don't have to live there. You don't have to have your tax returns. We don't even have to have a deposit check cashed. We just need it could be Mickey Mouse, Donald Duck. We just need some signatures here that this house is going to be leased at the time you move into your home, and we don't have to count your current house note. And agents would be like, I'll have that for you tomorrow. We had more mothers, brothers, sisters, cousins buying the next house because we didn't care, or renting it, right? Now, I was not on the lending side at this time. I was on the home building side. So we thought this was great because we were just like you. We didn't get paid unless they closed. But what happened? They closed on their new home, their dream home, and then let the other one just go. What's going to hurt your credit? I don't care. I got my dream home. What do I care? I'm buying a house for another 10 years anyway. We'll fall off in 3. People were doing that knowing what they were doing. There's a lot of people where this is going to happen. They don't realize what's going to happen. In 2008, 2009, 2010, I don't think Obama actually did it, but they used to say back then that Obama or the president or whoever, and this is not a political rant, this is just what they said, is giving you a reprieve if you're behind. It really wasn't him. He had nothing. I don't think he signed anything, to be honest with you. But what mortgage companies would do is they would say, you can get a less payment because you can't afford $1,800, but you can afford $1,000. So what we're going to do is I'm going to do it for $1,000, right? But they would tell you that it's called a loan modification, and you could call in and ask for a loan mod. Now, what they didn't tell you was, well, what they did tell you is you can't make your payment for 6 months to qualify for the loan mod program. A loan mod was a voluntary foreclosure, and no one knew it. Basically, you had to go into foreclosure, and then they bailed you out because they didn't want to affect their balance sheet. Because if I drag it out and I just charge you more and I just keep adding all that negative on the back end, even though it's a foreclosure, my balance sheet doesn't change because the house is still $200,000. It's still a $200,000 asset on my balance sheet. This is what's going to happen here. People are going to not realize what they're doing until it's too late. They're going to be like, because let's face it, they're going to have stars in their eyes because they can go get a new home that doesn't have water in it. And the next thing you know, they're going to get hurt. What I want you guys to do is to be different. I want you to be the experts to go out there and say, you don't have to go into foreclosure. If you've got equity, let's sell it. Or let's do a renovation loan now and we can buy, because you can do this loan up to 12 months from the date of the declared disaster. Guess what, guys? We still have 11 months to get people applied, not even in the house, applied. So let's fix it now, sell it in 4 months, and then buy a new home. Don't be the greedy real estate agent that's out there, yeah, I'm going to show you homes. Knowing that was going to crumble.
Unless they were renters.
Well, renters are different. I'm talking about buyers. So if they're a rental, let's go. Right?
It's possible you could use all of these loans, really, right?
Well, if you're doing it
Fix
right,
them up,
and at the
sell
end,
it,
yes,
then-
and at the end of the presentation, it's how to take this information and actually go to the marketplace. Because Christy's heard me say this. Your paycheck is a direct reflection of the value you bring to the marketplace. If you are not making the money that you want to make, it's because you are not bringing enough value in someone's eyes. Guess what? That someone is the client. Because if they're using someone else, there's a reason. And we talk about that actually next week in that class of how to become the expert. This is your opportunity to go out there and be the expert because you guys are here and you're learning about it. But if you don't do anything with the information, you're no different than the person who doesn't have the information. Okay, so I'm going to teach you today what to do with that information. But this program is a great program. I have a friend who was on the second floor of an apartment. It's the 3rd time this apartment complex was flooded in the last 18 months. They condemned the entire building. He has to find a home. And he's paying like $1,800 a month. I'm like, dude, you should just buy a house. But here's the thing, you got to hit him up now because guess what? He goes, oh man, I wish I would have known. I already leased. Because if you think about it, he doesn't have a place to live. So he's like, what am I going to do? Sit in a hotel for the next 30 days? Maybe. Live with your brother. But go out. I did not jump on this bandwagon right after. I noticed Michael didn't either. I felt, and I'm sure he felt the same way, it was too soon, right? The last thing anyone wants to talk about is buying a house and financing when they're covered in sheetrock and all of their family's dreams are destroyed. Okay, now is the time to, if you do this properly and you come from a place of abundance and then you're really there to help them, people will sense that. You don't have to offer up all of your commission, right? That's a sales technique. I'll give up half my commission. Okay. You're just trying to grab that low-hanging fruit. No, be of true value. You guys should earn every dollar that you make. I am never a proponent of giving up anyone's commission, okay? But here's an opportunity for you to you have now information they need. They don't know where to get it, and if you go, which y'all do know that Facebook is the #2 search engine behind Google. And there is no censorship on whether or not anything is fake or not, which is why I decided to do this class, because there's so much information out there that's just incorrect. So go somewhere where it's trusted. But if you push this, guys, you're going to increase your business. All right. So here's the renovation financing process. Buyers locate desired home, make a contingent offer, 203 home style loan approval. Buyer retains 203 consultant to perform feasibility analysis. That's why it's important to have them. Contractor, HUD consultant, and buyer meet at the house at the same to agree upon the work. The key on the renovation side, guys, is everyone's on the same page. That's a big deal. So what I feel like is if we build teams, it's a smoother transaction for y'all, us, buyer, and potential HUD consultant. 203, okay, so the HUD consultant is the one that sends the report to the appraiser after the improved value determination. Mortgage lender reviews it, loan approved, 45, 60-day close. Work begins on the property after closing. All right. Some could take longer, some may not, just depending on the area. The number one problem we're going to have with these is appraisals, which is really will be. All right, now, here's what I want to talk about. How can you guys make more money? Create referral partners with contractors, architects, and others. Many of these people, like you said, they don't want to sell again. They don't want to live there again. They probably reached out potentially to a contractor of some sort just to get a bid to see whether or not it's feasible to fix it and sell it or sell it. Imagine if you had a group of contractors, architects, and other people that are going to be getting those phone calls who are now using you as an expert in this area. Because if they sell it as is, you better understand how to sell a renovation loan to the next buyer. Because the next buyer doesn't necessarily have enough cash to buy it, because not everyone is an investor. Might work great on a $120,000 home, but most investors are not out buying $300,000 homes that need 30 grand worth of work. Most buyers aren't doing that. Most investors aren't. But a buyer might, just like on Fixer Upper. I like the area. I don't really see your vision, but let's fix it. And then, and he always says, this is now your value. And guess what? The appraiser told him what the value was. So we're going to know. Okay. Sell listings that have been on the market for an extended period of time. That's something I guarantee none of us have ever really used it for, but we should. Cut out on buyers looking at too many houses, right? Finding Fixer Upper. If you do a good job, and we're going to teach you guys the right questions to ask, and I know Keller Williams does a great job of training, but we do things a little bit differently. If you're asking the right questions, you should never have to show 100 homes. If you show, and that's obviously high, you should never have to show 20 homes. If you show 20 homes, you don't know your buyer. You didn't ask the right questions. We're going to teach you those right questions to narrow it down. I have to show 5 or 10, but within 5 or 10, you should either be able to get one narrowed down, or they should be able to fix it. I know Christy's really good at asking for the sale. The majority of salespeople, real estate agents, salespeople, whatever, they suck at asking for the sale. They're scared. We're going to teach you how to not be scared. No, I'm serious. Right? What happens? You guys are going to get a preview. What happens, right? You're like, so we had great, looked at the house, right? And you liked it. Okay, so what do you say? So would you like to make an offer? I don't know. I think we should probably go look at 5 more, because there might be a better one. There's always a better one. There will always be a better home. Always. So if you ask the right questions, you know who they are, you're going to be able to time it out. See, because if they're walking around going, oh my God, I love it, why are you asking them if they want to write an offer? So guess what? We're going to write an offer on this home. I'm going to go back to the office, do a CMA, tell you how much we need to offer. I'm going to send it to you. You sign it. We're going to get it over. Sound good? If they're not ready, they're going to be like, whoa, I'm not ready to write an offer yet. Why not? You want to buy a house, right? So there's a big difference there. When someone decided to get in your car, talk to me, get moving forward, they made the decision to buy a home. Your job is to let them know that that was a good decision. People are just looking for affirmation. Nobody needs a home. They want homes. They can rent a home, they can rent an apartment, or they can live with family. Nobody needs a home. It's a luxury item. It says FEMA. So we're going to teach you guys how to do that. Make listing presentation. Apparently you don't even have to have a kitchen. The one lady was like, I don't have a kitchen. They're like, you can go to McDonald's.
Really?
Like, you probably go out to eat anyway. Like, You can go to Walmart and buy a hot plate and a toaster oven. There's your kitchen. They're harsh. Because think about it. They're talking to thousands and thousands. I don't want to hear your sob story. You know, someone died over there. Like, oh, it is what it is. It's our job to come in and be the empathetic ones and say, look, we understand, and we're going to help you get through it. Because right now, my assistant, she had a farm in Needville, gone. She was renting a house in Sugar Land, ripped off part of the roof, leaked the entire ceiling in her living room, fell with sheetrock and everything. All over her furniture, all over her pictures, all over everything. This was last week. So the damage happened, they didn't get the roof fixed in time, rain and other things, the weight of everything. I mean, I can tell you, I had a conversation with her on Monday, I'm like, the farm has to go. You just need to sell and be done with it. You need to do this. We had to compartmentalize it because she couldn't see beyond trying to just keep her head above the water. Be the light for those people. Make a listing presentation on a house. So if you go on a listing presentation, you can say, look, we have options here. You don't just have to sell it for as is. I can market this as a renovation. Let's get some plans. Let's do this. Let's do that. One thing that we used to do with houses in the new home market when it was a really small backyard is we'd get a pool company to do a rendering, and we put that thing on a big ass easel so people would be like, because if you're buying a $400,000 home, $300,000 home, you might want a pool. So you can say, like someone walks out and say, man, this yard is really small. You can say, you know what, it's not really small. It's easy to maintain, but here's the great news. You can get a pool. And here's what it looks like. And they're like, I like that pool,
I
right?
usually buy it too.
Yeah. And then they go with the person who did the pool drawing. So a way to do that, show investors how to purchase multiple houses versus using, you know, obviously not most, well, at least the investors I work with, very few of them are going, hey, I got $1 million, right? Usually they're like, I got like 100. Well, in this scenario, you could literally, 25% down, they could go buy 4 $100,000 homes, finance in all the repairs, turn around and sell them, than versus buying $100,000 home. If you have that conversation with your investors, they're gonna follow you anywhere you tell them to go. Because nobody's
You said you
done that.
can't flip the houses, so how can they sell it?
No, for rentals.
Oh,
Like,
for rentals.
yeah, for rentals. Rental. But in 12 months, after that rental's up, they can sell it. Yes, but it's buy and hold. Okay. But there are still people that, like do y'all know Chad Ray? I think you know Chad Ray. Chad Ray's father is Dr. Ray. He's a dentist here in the Cinco Ranch area. He owns 10 rentals. He paid cash for 8 of them. This would have probably been a great option for him. Yeah.
So they have to hold it for up to 12 months before they can sell
I would
it?
encourage you to hold it for at least 12 to 18 months to not throw up any red flags. Because once you do after a year, that's your house. But you can't turn around, flip it, and say, you will throw up a red flag, that's called mortgage fraud. But if you rented it out for a year and then decide, you know what, I don't really like being a landlord or have tenants. That's what I did. I rented a house out one time for about 18 months and sold it because there was $60,000 in equity. And then I went and bought 2 more rentals. So, you know, in fact, I have one right now that I just re-rented out. That's the one that the tornado went through. Before I rented it to these people, I seriously went back and forth like, okay, it's been 14 months. There's good equity in the property. Do I sell it? And I was like, oh, you know what? My return's better this way. But you're going to have people that are buying and holding anyway. This is a great way they can go. Because let's be honest, if they buy damaged properties, they're going to get them cheaper than market value was 3 months ago. So, and they're going to need work. Sell cash only homes back to regular buyers. So this is where your flip people come to the investors. So let's say they want to buy it and flip it, encourage them to buy cash or hard money or whatever it is they're going to do, but use the renovation type style products. Because what's the big thing going on right now? Wholesaling. Do y'all understand wholesaling?
Yeah,
You know
30% of the value.
Huh?
30% of the value.
Yeah. So you're wholesaling and you go, woo, and then you do an assign to.
Yeah.
I actually bought a wholesale. So the one I just told you that I made $60,000 on, I bought from Eddie Gant. Do y'all know who Eddie Gant is? So he's a real estate agent, but he also owns We Buy Ugly Houses. And Chris Johnson used to work for him. Chris has done very well on for recording. So Eddie bought this house, and I drove by. It was in my neighborhood where I live now, and it was handwritten, and it said "For sale, cheap" in Sharpie on a poster board in the yard. And so my wife called, and we said, "How much?" He said, $130. I said, "We'll give you full price," because we already knew it was worth like $170. So I was like, sold. He bought it from a divorced family who had lived there for like probably almost 10 years. They probably only owed like 60 or 70, and they just were like, shoot, I'll take 110 just to get out. He made 20 grand just by, now he actually closed on it and then we did a whole transaction. A lot of the wholesalers today is, I'll buy it from you and I do subject to, and then you buy it and we all go to closing the same day and you don't know about that person. But this way, but it worked out really well. Well, I actually lived in that home while I built my house for almost a year. And then I sold it and I still made money. So he didn't care. He just wanted to get out. And it needed work. I mean, it was in bad shape when I got it. It had feces on all over the walls, and like, because when they knew they were getting foreclosed on, they destroyed it. I mean, speakers thrown in the wall. I mean, it was bad, you know, but it was still 40,000 under market value. I knew I put 15 in it and still walked away. So I bought it for 130. I sold it for 203, 1,600 square feet in Longmeadow. Then I bought one 3 houses down. This is where agents. You want to know how stupid agents can be? You ever heard of Longmeadow Farm? There you go.
Yeah.
There you go. You've heard of Longmeadow Farms?
Oh.
So this agent put Longmeadow Farm. The house sat there for 6-8 months. Yeah. Guess what? If you type in Longmeadow Farms, it doesn't. That house never shut up. So I sold a 1,600 square foot home for 203. I bought a 2,400 square foot home for 200. 3 doors down. It's worth 260 today. That's the one I'm renting. That's the one that has the damage that I'm renting. So remember, you're gonna hear. So y'all can't answer this when you come next week. What percentage of you suck? According to your association, NAR, National Association of Realtors, what percentage? That's a little high. 92%. Not me saying this. Your own association that you pay annual dues to.
I know about this house in Sugarland where the person who's selling it has put the wrong school district on the house, but I know, because I know I've sold the neighboring homes, I know the correct one, and it's not selling.
It's great for
So
an investor to go in.
I only tell my clients,
Yeah.
because it's going like 60,000 below now.
Send me that address. So, but 92% according to NAR of you suck, right? Don't worry, I know 92% of lenders suck too. So it's totally okay. But the question that was asked back in November was, did you enjoy your real estate experience and would you use your agent again? 92% of people said they would not use their agent again. That is the greatest news on the planet, especially for you being new. If you provide value and content, you will capture more business. So it's a great time. That's what we're going to teach you guys next week. Back here real quick. Your investor buys it for cash, you get paid. You sell it on a renovation product, you get paid. You just doubled your income. Okay, so here's the contract information. They must be licensed and insured in the state of Texas. Must be able to stay being paid in draws. 203K at home style can be family related. You've got to be able to provide. So that's the 203K limited, not the other one. Must be able to provide 3 references. They will be asked to provide financial information. The biggest thing is they want to make sure that when they get the money, the trades are going to get paid. Okay.
So one of the things that I have come across is even the big, giant, well-established contractors, because there's so much need right now, that they're hitting their daily limits on what they can pay out off of their accounts. So people are starting to get upset in terms of that, because they're like, hey, I'll pay you tomorrow because I can't withdraw any more money today. I can't roll any more payroll today. And so you have to make sure that you're asking not only that question of the well-known, really established ones, is are you set up? Are you taking on more homes and more processes than you can pay out in a single day, even though you're pulling draws? Because they're getting the money in, but their banks are only allowing them to disperse certain amounts of it in a day. I mean, we saw some folks out in Candy Gate last night that were threatening to get back in their trucks and go back to San Antonio and not finish jobs because they were waiting to get paid.
Yeah. The same thing happened in 2008 with the new home markets, just because everyone was crashing, you know.
Right.
What I would also tell you is there's a lot of great custom builders that have decided to get into the renovation business just to help out. So they've got 10, 15 years of high-end custom experience, so they already have the trade base. And typically, these guys that have been in business 10, 15 years, they don't need the draws to float. So get with those good reputables. What you don't want is the fly-by-nights. And I mean, everyone's been saying that, but they're out there like crazy. End result, buyer gets a home they want. You sell old inventory, great transaction, creates a great referral. The big key, honestly, is you're going to have more communication. If you do a renovation loan, you'll be talking to that borrower way more than you want to, because it's not just inspection, appraisal, close. It's did the tile go in? Did this happen? But here's the great news: if you create it to be a wonderful experience, imagine the amount of referrals you're going to get. Because 92% didn't have a good experience last time on a traditional transaction. Okay. So here's what we offer, just in Hancock. So I have a branch here. I live in Long Meadow. I have a branch in Sugar Land. I also have a branch in Dallas. I'm getting ready to open up a branch in San Antonio. We do credit repair programs. We have great folks that can help with that. You know, we can do first-time homebuyer presentations if that's something you guys want to do. We don't do the first-time homebuyer presentations that you can have bad credit, no money. It's really meant to be educational because we want willing and able, not just willing kind of thing. So as a newbie, don't market to that because you'll just get people with bad credit, no money, and guess what? They don't get to buy. But you should put people in rentals because then they become buyers later. We do tax education. Tax education is teaching someone the true cost of borrowing over time. Most folks will not take the time to explain that the true cost of living in that home is actually Y, not X. Does that make sense? Give you an example. If your house note is $1,800 a month, but they're used to paying $1,500 a month rent, they're gonna freak out a little bit, right? What we do is we sit down and we explain to them, but by having the tax deduction, what you're gonna be able to do now is you're gonna get an extra $4,000 a year on your return, which then means you're getting $310 back in essence every month. So your true cost of living there is actually $1,490. That makes sense. So they can actually adjust their W-9 and things like that. Partner marketing programs. I'm not really going into that. What we do, and Christy was telling you guys a little bit, is we offer marketing programs that help bring purchase referral leads to you guys. And so if you're not friends with me on Facebook, please friend me. You'll see I'm getting ready to post one of our hashtag Zillow killer videos. Anybody here use Zillow before? Right? Did you have a ridiculous amount of success? You got your money's worth? Some people have. 5 years ago, 6 years ago when it first came out, it was great. Problem is now is they sell your information to 18 different real estate agents. Unless you're Victor Short, who's used to spend like 18 grand a month, and you're spending 500, who do you think's getting the better, you know? So what we decided to do a few years ago was to take Zillow out of the equation, because if y'all don't know this, Zillow is trying to take y'all's jobs.
Oh, yeah.
They're a data collection center, basically. There's some other ones, you know, we got pretty much every loan program. We got niche financing, which you heard about today. You know, this is all kind of standard stuff. One thing that's a little different, everybody that touches your loans works for me. We don't have an off-site processing center in a different city. When I worked at one company, our processing was in a different city and our underwriting was actually in a different state. Okay, I can argue all different sides of why one company is better than you. What you're going to find over the course of the next 4 or 5 times we meet is I talk very little about actual mortgages because guess what? We do them, we're good at them, we take care of people. What I'm going to really be talking about is how to help you grow your business. All right, but my assistant speaks Spanish. My processor I have 2 processors. They speak Spanish. I have closing, underwriting. Everybody's in-house on my payroll. So the advantage there is if I need something answered, I just pick up the phone because I pay them. So they tend to answer when I call. So that's probably something that's a little bit different than me. The other thing that's a little different about me is I sold homes. Okay, I started out in this business in 2002. I sold homes for David Weekly Homes. I got into the business because I bought a new construction and could not believe at what a poor job the salesperson did. And I was like, and I'll just tell you, I said, if that idiot can sell homes, I know I can sell homes. So I actually sold part of the company that I owned at the time and got into home sales. Crazy. So I worked for David Weekly, sold homes for about a year, then was promoted. I used to run sales, construction, and warranty for David, about $30 million a year in revenue, had 6 communities. In 2011, I got called in thinking I was getting promoted, thought I was going to be moving, and was told to not come back the next day, that they were going in a different direction. And it's a good time, week before Thanksgiving. So I'm just giving you a little insight on me, but what happened was I lost my job, and I won't go into all the details today because I'll tell a little bit of the story, but really what happened is I never wanted to be in mortgages, like ever. Like, what is sexy about a mortgage? Nothing, right? People do not want to talk to me. I'm sorry, I need your social security number, your date of birth, and your bank statements. I mean, who wants to do that all day, right? I got into mortgages honestly just to stay close enough to the housing business that I could get back in. Some things happened, some things changed. I'll tell you guys about that on another day. But what really changed for me is I went with what I knew, right? You're new. So the way they tell you, go work your sphere of influence. Well, that's what I did. I landed First Texas Homes. I became the preferred lender. They only have 1 community now in Houston, but at the time they had 12. Great account. Met a gentleman went over to Anglia Homes. You all heard of Anglia, I'm sure. They do probably 400 or 500 closings a year now. Well, I took one community, and in the course of 18 months, I had 60% of the city. No money exchanging hands, we just did a good job. Why? Because I can speak their language, I understood what the managers wanted, all that kind of stuff. I was closing over $20 million a year with them. My mom was diagnosed with stage 4 cancer on a Monday. On Tuesday, they called me in to tell me they opened up their own mortgage company, and I watched $20 million in revenue walk out the door. So my story is I'll be 42 next week. By the time I was 40, I lost both my parents. I have no brothers and sisters, no real family, and I've lost my career twice. The reason I teach these classes and I do all this is I want to help you guys grow your business. When that $20 million a year account walked out, that was 90% of my business.
Oh my God, I can't even imagine it.
We were printing
How
money.
you on?
Life was like, but I was, for a lack of a better term, and hopefully I can invite it back, I was their bitch. They would call and they would say, at like 8 o'clock at night, they would say, well, I guess since you didn't answer the phone, I'll just call the other lender. Guess you don't want this deal. That's how they were trained to treat us. Here's what you're gonna find from me. I am no one's vendor. I'm not selling you anything. I'm here to help people grow their business. I am a true referral partner. So what I did is I knew I had to be different. And so what I did is I started generating leads for me, and I started converting, and my business started to pick back up. And I'll give you guys more insight of that next week when there's more folks here. But basically, I then said, if I can do it, I'll teach y'all to do it. And so that's kind of where the hashtag Zillow Killer. In 18 months, I more than doubled the 20 million that walked out the door. I now have locations in multiple cities. We are a nationwide company, but our corporate office is here in Houston. Like I said, I did a video with a guy that's been with me 60 days. He's with EXP right now, and he has over $600,000 under contract off of the leads that we've provided to him. So that's kind of what makes us different. We want to help you guys do that. If y'all want, or you can wait till next week, I'll be bringing free copies of my book that you guys can have. Basically, I just wanted to be different. So how many of you, you're new, how many of you are there in Houston? Do you know, registered?
30,000.
It's over 40,000 registered.
Yeah, that's too many.
40,000. So the thing that Christy and I talked about is I want to help you differentiate yourself in this shift. There's 40,000 of you. So think about this over the next week. Why would I use you? So really think about that. What we're going to do is we're going to teach you how to build your brand, because people buy from people they like. No one cares that you work at Keller Williams. No one cares if you work at RE/MAX or EXP. Now, having a company like Keller Williams behind you is important because you have to have a good company. You have to have a good structure. You have to have something that's recognizable. But if they could love Keller Williams and think you're a complete idiot, and they're not going to use you. They could love you and think Keller Williams is a terrible company because their last agent worked at Keller Williams and it was a terrible experience. But if they love you, they'll still use you. So the way I look at it is you guys have the best of both worlds. You can be great. The company is already great. I know Christy's great. The sky's the limit. So what we want to do is we want to make sure that other people know how great you are. Cool? All right, so that's all I have. You guys have any questions or anything for me? Right on time. All right, so I hope you guys will come and tell all of your friends in the real estate business to come next week, since we are an agent-friendly office.
That's right. You can invite anybody from any brokerage. Please invite your guests.
It's an opportunity.
We want to fill this room.
Yeah, absolutely. And you will have tangible information that you'll literally be able to go out and implement that afternoon.